Overnight, the three major U.S. stock indexes all plummeted. Why is this happening? For our friends who hold a lot of U.S. stocks, how should we deal with it next? Wuge explains the coping strategy in detail. Click a thumbs up at the end. The reason for the sharp decline of U.S. stocks is actually not difficult to analyze. There are three main points. First, after the three major U.S. stock indexes hit record highs, they have successively experienced top divergence adjustments, which is a normal rhythm. Whether it is the Dow Jones Industrial Average, which has fallen for 10 consecutive times recently, or the NASDAQ, which has just hit a new high a few days ago, or the S&P, which has begun to adjust, they have actually hit new highs recently. In recent days, Wuge's live broadcast has talked the most about whether the top divergence of the reverse NASDAQ index spectrum can be resolved. Wuge's point of view must be remembered by everyone. The Dow Jones Industrial Average has been fully adjusted, the S&P is still a little worse, and the NASDAQ has not adjusted much. Therefore, at the close of this morning, it is not surprising that the NASDAQ fell by more than 30%, and it is even necessary. Looking at the trend of U.S. stocks over the past year or so, it is normal to fluctuate upward, and there are no shortage of large adjustments similar to July. But every adjustment rewrites history in a way that sets a new high, and this time may not be an exception. Therefore, the adjustment of U.S. stocks is reasonable, but it is a little faster than Wuge imagined. Second, the average price-earnings ratio of U.S. stocks is at a historical high. Statistics show that the current price-earnings ratio of the S&P 500 index is about 20 to 22 times, while the historical average price-earnings ratio of the S&P 500 index is usually about 15 to 16 times. And the current market value valuation is at a very high position. From the perspective of specific stocks, we can see that before this sharp drop, Apple, Amazon, Tesla, and other weights all hit record highs. Therefore, it is still the same sentence: rising risks and falling opportunities. There are no stock market sectors and stocks that only rise and never fall. This point is for global military use. Therefore, the adjustment of U.S. stocks should not be too unexpected, but should be considered as a necessary way to resolve risks. Third, Powell's hawkish speech was the direct fuse. There were several things at 3 a.m. today. The first thing was the announcement of a 25 basis point interest rate cut, which has long been digested by the market and is in line with expectations. The second thing is that the Federal Reserve announced the dot plot, which shows that the view of the ticket is that there will be 2 interest rate cuts as much as possible next year, which is much lower than market expectations. The third thing is that Powell's speech is more hawkish, which means that the interest rate cut at the beginning of next year will be basically skipped. In fact, if we calm down and think about it, we will understand that the expectation of the number of interest rate cuts next year has already begun to worry the market, and the market feedback is slightly excessive. After talking about the main reasons for the decline, let's talk about the response strategy for the next U.S. stock investment. First of all, Wuge believes that the decline of the Dow Jones is excessive because the Dow Jones's 10 consecutive declines have set the longest decline record since 1974. And we have analyzed before that the Dow Jones has completely resolved the top divergence and is now entering the oversold range, so we can consider significantly increasing the position of related targets. Secondly, after today's sharp decline, the S&P 500's indicators that were not fully in place are basically in place, so the S&P 500 has entered a better investment range. Finally, let's take a look at the NASDAQ. Although the decline today is the largest, it is still not fully in place, and there is still room for adjustment. Therefore, everyone should know how to choose in the investment ranking. The above views are for reference.
After watching this video, don't forget to give it thumbs up and subscribe to our channel. Hit the bell icon to get notified whenever we post new content. Your support means a lot and helps our team create more videos like this. Thanks for watching.